Hey guys, this is Scott Horne with the Owner Finance Network, and I'm here with our DSCR lender extraordinaire, Liz, who's just awesome in this business. Welcome, good to see you.
Thank you.
So Liz, for everybody, tell us a little bit about yourself,
Sure.
your company, what you do.
Well, I am a mortgage broker.
Yeah.
I've been in the business 18 years. 12 of those years I was an underwriter, but now I'm a licensed loan officer. I have over...
You were an underwriter, not just an LO or a processor.
Correct.
You're like the top dog out there.
Yes, I was a conventional FHA and VA underwriter for 12 years.
I love that because that's the decision maker.
Yes.
Which means if you get to that level in that industry, you know it all.
Right.
Because it all stops with you. Not the loan officer, not the processor, anybody else. It all comes to you to make that final call.
Correct.
That's
Yeah.
cool.
That's right.
Sorry to interrupt there a little
That's
bit.
okay. So yeah, now I'm a licensed loan officer. I am a broker, so I have over 200 lenders available to me. 60 of those are DSCR. I love me some DSCR loans.
Wow, I love that. You know, I'm going to be very honest. You know, originally when everybody was talking, you know, everybody wants to think there's something new out there. DSCR, I'm going, what in the world is DSCR? It took me forever to know what it was, then to remember it. Actually, I'm going DSCR, XYZ, WA, whatever. DSCR, what does it stand for?
Debt Service Coverage Ratio.
Okay. I actually know what that means, but for the other guy out there, what does that mean?
You know, the basic gist of it is that your rental income covers your mortgage payment. So if your rental income's $1,000, your mortgage payment's $1,000, that would be a 1-to-1 ratio.
Pretty easy.
Yeah, typically lenders want to see a 1 ratio or higher. Most of them are like 1.1, 1.25, but some of them do lend underneath the 1 ratio, which would be called a low ratio or a no ratio loan.
You know, in my banking world, using your small commercial banks, historically it's been 1.2.
Right.
In the last 5-6 years, I've seen some of the banks go up to 1.25 as an average. Would you say it's more of an average like that in the industry, or what?
I would say 1 is probably more of an average. We like to see 1. Yep.
So if your income is $1,000, after you take taxes and insurance out, then your net income, your principal and interest payment can be the same dollar amount. So if taxes and insurance are $250, and you got $750 left over to allocate to the mortgage. So that's your 1-to-1 you're talking about?
So it's the full PITI HOA payment. So it's your full mortgage payment compared to the rental income.
Okay.
So yes, as
So
long
your
as
full
they
mortgage
equal.
payment, so long as they're the same, I got it. So the mortgage payment, PITI versus this same thing we're talking about.
Yeah.
Okay, that's awesome actually. But you know, so many people have so many questions about this and how it really works. So let me just ask you a few questions. So can any property qualify for DSCR? Is it residential only, or is it residential and commercial?
It's commercial also.
Okay.
Yeah, they look at it a little differently. They add in the expenses into the DSCR ratio, but it's basically looked at the same way.
Yeah, commercial is a little bit different when you do an analyzation, but I get that, understand it. So I'm a residential guy, so we're going to go residential primarily here for a minute.
Okay.
What's my max loan to value?
So on a purchase, we're going to do 85%. I have 2 lenders that'll go up to 85%. Typically, it's going to be 80% on a purchase or a rate and term. Cash out is typically going to be 75%, but I do have 1 lender that goes to 80% on a cash out. You just need a 720 FICO.
So to put that in layman's terms, if I'm going to buy a house, you can take me up to 85%, between that 80 and 85% level. If I already own it and I'm doing a refinance, either I'm taking a bank out or a private lender out or a hard money lender out, it would be up to probably 75%. Now, does that include cash out refi also, or does it matter?
75 would be cash out.
Okay.
If you're going to do rate and term, it would be 80.
Got it. So if let's make math easy. So if I have a house that appraises for $100,000 and my loan is 80 and all I want to do is go in and borrow 80, great. Rate and term refi is what that means.
Correct.
I know a lot of people don't understand those old terms, you know, and I'm an old mortgage guy from a while back, so I get it. On the other hand, let's say I only owe 60 on the house and I want to pull 15,000 cash out. That's going to be probably to that 75% level.
That's correct.
Okay.
Yep.
Okay. So as I'm doing that, I know that this is a mortgage loan. And so often mortgage loans are gonna be credit driven to certain regards. What are they looking for? Credit wise, financial wise? I mean, is it all property only? Or are they looking at my financial statement? What are they doing?
So that's one of the reasons I love this loan and my investors love this loan, because there's no income and no employment qualifications. It is strictly based off the cash flow of the property. Credit wise, I have one lender that can go down to a 575 credit score. Most of them are looking for 640, 660. You're gonna get your best pricing over 700, 720.
Okay. So the better your credit, probably a little bit better rate and term, a little bit better cost and expense. Those
Correct.
kind of things. I get it.
Yeah, lower credit, you're also gonna be limited on your loan to value when you have
Okay.
lower credit scores.
So if I bought a house, let's say I used what happens often in the industry, investors, they go buy a home using a hard money lender. And hard money lenders are usually in that 70% loan to value range today. So they're, if it's a $100,000 appraisal, they owe $70,000 to the lender. They want to come do a $70,000 rate and term. If they roll the closing cost in, is that still going to be rate and term as well?
Yes,
So that's available.
yes.
Cool. You got good credit, and interest rates are going to fluctuate a little bit, right?
Always, yeah.
I mean, that's always the game. They've been kind of high lately. I've been hearing they're up in the 8.5, 9% range.
Yeah, that's been a pretty average rate for the DSCR loans. But
And I heard recently they may have come down just a fuzz.
yeah, so I mean, I priced one client out about a month ago, and then I just recently priced him out again, and he's about 3/4 of a point lower. So rates have gone down a little bit
And
lately.
you know, that adds up.
Yeah,
The 1
absolutely.
point on a $100,000 loan is $1,000 a year. 2 points, $2,000 a year, times 5, times 10, times 20. It adds up.
Oh yeah.
So being rate sensitive is always important. So these DSCR lenders, up to 85 on a purchase maybe?
Yep.
80, 85, 75 on a refinance,
On a cash out.
cash out.
Yeah, I
But
can go to 80.
on a refi.
I
That's
can go
good.
to 80 on a cash out with one lender,
That's,
which
That's-
is very unusual.
it is. But I get it. It's just a risk issue that these lenders look at. Do I have to have my property leased before I bring it to you?
So that's one thing about these lenders. I have over 60 DSCR lenders. They all have a different set of guidelines. So some of them require it to be leased. Others, you can do it when it's vacant.
Really? So in other words, how do you demonstrate to that lender what the rental is? Is that going to be through the appraisal process or something else?
Yeah, so we order the regular 1004 appraisal, but we also need the 1007 market rent analysis. It's an additional appraisal form that the appraiser completes that'll tell us what the market rent is.
Okay. So in other words, could I provide to you what I think the rental market is for this property area, and you provide that to the appraiser just as consideration, or they do it all on their own?
So, I mean, we can provide some comps to the appraiser if the market rent comes in low and just give, see if he can increase the market rent. But
Right.
normally, that's not going to happen.
Okay, I got it. So a DSCR loan really sounds pretty cool. There's a lot of investors out there who are in the rental game, or they're in the short-term rental game. Is there any issue there if they do an Airbnb on these properties?
So some lenders allow short-term rental income.
Really? Okay.
Yeah.
So that brings up a really good question. No, so there's 3 types of rental income out there that I see. There is your traditional rental income where the person's going to live in the home as their residence for a year or 2 or whatever it might be.
Long-term rents.
Yeah. But then you could have a midterm type rental, right? That might be a 3-month type deal, 6-month type arrangement, where maybe you're doing a corporate lease for somebody, or maybe some type of an insurance company scenario out there as well, which you're getting at a little bit higher level over this one. And then you go into your short-term rental, where oftentimes you get to a 3rd level of income, overall on a monthly basis. How do these DSCR lenders look at these different levels?
So it's going to go off of what the appraiser is going to use for the comps on the 1007 market rent analysis. So, and when you're looking at a property as a short-term rental, you want to specify to the appraiser that you need short-term rental comps, because they will not automatically do that.
I'm pretty well versed in how you get basic rental comps. That's easy to find. It's just MLS stuff, typically what that's out there, or other legitimate advertising, things that you can find in that generalized area. But I guess like Airbnb lists average pricing for that neighborhood, and they can go off of that, I guess.
Yeah, it's
An
definitely a
average
little
number of
harder.
days?
It's harder for the appraisers to
Yeah.
get the short-term rental comps. They definitely have to dig in there a little more. So we use AirDNA, and we can actually do projected rental income
Yep.
for the property.
Okay.
There's the button on there.
And even so I can see, and the reason people do short-term rentals oftentimes is that they get a lot higher average monthly income over traditional leasing of the property. I get that. And let's say that might be as high as 40% higher. So the lenders will go off of that 40% higher number. Holy cow.
Yes.
That's awesome for that industry, I think. And it gives them a lot of latitude in
It
ways
is
to do
awesome.
things.
Yeah, so there is something to keep in mind. Most lenders, when you're using short-term rental income, they will decrease the loan to value by 5%.
Okay.
That's
Well-
how they hedge that.
Yeah. Okay, I was going to ask that question. That there had to be something there to offset those risks. But it's still going to be limited. It's still going to be a loan to value type loan. No, max at 85, down to 75, averaging that 80% range. Typically, that's out there. So I buy my house on January the 1st. I get it renovated on February the 1st. I have heard that there are some lenders that have a minimum time of ownership before they'll do it. I've heard 90 days. I've heard up to 180 days. What's really out there though on the time frames?
Typically, it's going to be 6 months. That's what most lenders are going to want. 6 months of you owning the property before you can do cash out. But there are some lenders that are 3 months, and then I do have one lender that will allow you to refinance right away.
What about just a basic rate and term? You know, I'm not trying to pull any cash out. I just did a hard money loan. I'm at 75% loan to value today. I'm gonna have X number of closing costs. Is there a minimum hold time for that?
For most lenders, they'll allow you to refinance right away.
Right away. That's cool. Okay, just not the cash out per se.
Correct.
You know, so often in the banking world, to draw an analogy here a little bit, in the commercial banking world, it used to be 12 months before you could do a cash out. Yeah, not anymore. It's 2 or 3 years.
Oh,
So
wow.
this is a whole different concept that will allow you to pull that out if you want to within 6 months, not that kind of a time frame.
Yeah,
Sounds like a pretty damn good program, doesn't it?
I love this
That
loan.
is, it is. It's really good out there.
80% of what I originate are these DSCR loans. I specialize in them. And just something to keep in mind, we can do rural, we can do manufactured homes, we can do first-time investors, first-time home buyers.
Really? That's over the top. That's great. So Liz, I get all the things we said so far. One of the things I've seen a lot of people run into in the commercial banking world is banks don't usually have a minimum loan balance. Mortgage companies historically have had a minimum $50,000 loan. That actually could have been raised up a little bit. I'm not really sure, but is there a minimum or maximum loan balance in the DSCR world?
Most lenders do have a minimum loan amount, yes, but I do have one lender that has no minimum loan amount.
Really?
Yes,
So
very
if I got a
popular.
$30,000 deal,
We can get it done.
I don't know where you can find deals that cheap or anything else, but at least not here in the Texas marketplace. Maybe somewhere else you can.
Yeah, Midwest somewhere.
So we get our deal there. I know these are intended to be rental type loans.
Yes.
What if the investor wants to do a wraparound mortgage of some type, let's say? Is that something you want to have any knowledge of at all?
I don't want to know that.
Okay, just out of sight, out of mind, don't tell me.
Yep.
Generate your income production, however you're gonna do it, and then go do it, because they're gonna have the same issues. This is a mortgage loan, same due on sale, those kind of things.
Yes,
So-
they might, yes.
Yeah, so investor beware, those things are out there for consideration.
Yeah.
Got it. So we get through all of this, I got the terms, conditions and whatnot. I give you a buzz on the phone. How do we get started?
Yeah, so we're gonna take an application, and it's a pretty simple app because there's no income and no employment. As far as all the properties that you own, most of the lenders don't even care. They don't wanna know about them.
You don't need my financial statement? You don't need my tax returns?
No,
You don't need all this other stuff that everybody else asks for out there?
no.
1003 only,
Yes, yeah,
I
for
guess
the most part.
the appraisal, right?
Yeah, 1003 credit. We do pull credit on all of our bars, and
Right.
then we collect some minimum documentation, you know, mortgage statement, driver's license, but we don't need a lot of docs. Very light doc loan.
That's amazing. I mean, you can see why it's such a popular loan out there in that regard. So if I get this stuff to you pretty quickly, what's about the average close time?
It's typically going to be like a regular mortgage loan. It's going to be 30 days, and that's mostly hindering on the appraisal. That takes the longest part of the process.
I'm just curious, these DSCR lenders, are they, you may not know this answer, are they like hedge funds doing this? Are they private capital sourcing? Is it Fannie, Freddie? I mean, what, do you know what it is at all?
Most of them are private money
Of some kind?
backing. Mhm.
Okay, so
Yes.
money raised in some format that they use for all this stuff. You know, that's great, that's awesome.
They're called business purpose loans. So yeah, not Fannie and Freddie. We're not, you know, typically not going to be QM based.
Well, that's good, obviously. So not all that's out the window. These are investor loans.
Yes.
You know, based upon income production, hedging our bets on loan to value a little bit, those kind of things. So Liz, last but not least, what is this thing going to cost me, you think, out there?
Yeah. So
Let's say, let's give me a percentage of the loan overall. And by the way, sometimes I know that on a lower loan, the percentages can be a little bit higher than on a much higher loan. But you know, let's say a standard $300,000 basic refinance, just rate and term refi. What am I looking at in my cost and fees to do this?
probably about 4 to 5%, just like a traditional mortgage.
Okay.
The costs are about the same.
And that's going to have everything included from the lender fees, the underwriter fee, broker fee, processing fee, appraisal fee. There's no medium fees. Title fee. They're going to want you to put additional funds into escrow, probably for taxes and insurance.
Yeah.
So all of that rolled in kind of adds up to this overall.
Yeah.
So it's not just a lender fee only, it's really the whole encompassing dollar amount.
Yeah.
So that's not bad. And I don't care whether you're doing a DSCR loan, as you said, or doing a traditional mortgage. Those are all the same pretty much out there. What it
All
is.
the same.
That is awesome. Is there any reason why someone shouldn't consider a DSCR loan?
You know, the interest rate's probably maybe half a point higher than if you did a full doc loan. So if you are a W-2 investor, it's easy to calculate your income. You could go ahead and try to do a full doc loan if you want, but this is a lot easier.
Most investors are not, and they would not get it past
Yeah.
step one out there. So really, that to me is the biggest selling point, that you don't have to be that W-2 1099
Right.
Person that has great financials and
You don't have
Great
to
credit.
have done your tax returns. We don't pull transcripts. We don't verify any of that information.
awesome. So guys, if you're looking to do a DSCR loan, take time, reach out to Liz. Liz, what's your contact info, kiddo?
602-410-0995 is my phone number.
What's the name of your company?
I work for Nexa Mortgage.
Nexa.
Nexa. Yeah.
N-E-X-A.
Correct. We're the largest brokerage in the U.S. We have about 2,600 loan officers.
Just.
Just.
Are you guys all out there fighting for the same piece of pie or what?
Well, I don't know what they're doing. I don't pay attention to them.
You're just knocking it out of the park. No, that's cool. Well, sounds awesome. It sounds like an awesome tool for the investor marketplace out there.
Absolutely. Yeah, reach out.